FTX is crashing. Tom Brady lost all his money. Now Bitcoin's in free fall and it's bringing down the market with it. Where is our election rally? Let's talk about everything going on. Welcome back to the Sunday report, to the weekly report. Oh wow, it's gonna be hard for me to break. So first things first, my suspicions were wrong. It happens, but that's what happens when you're fully transparent, is that you make mistakes and then you have to just own them. Before we talk about that, let's talk about what happened, because this is nearly impossible to predict. FTX was the world's third largest crypto exchange. Today, they are insolvent, and that is because of a relationship that they had with a hedge fund called Alameda, which was ran by Sam Bankman-Fried. He's one of the biggest names in crypto. He's a multi-billionaire, was a multi-billionaire. I think now he's about $600 million in debt and bankrupt, but he was a huge name before. Now, we're not gonna get too technical with this story. I'll share a link to this Twitter thread in the description of the video if you wanna go check it out there. But what we're gonna do is cover a summary of what happened. Basically, you have a hedge fund not disclosing its relationship with the exchange like they legally are obligated to, and then participating in illegal activities so that this hedge fund can basically print money and put all its investors at a huge risk. And because this trust has been broken, no one's going to come to save the day here. If you think there's some way out, someone will acquire the company, definitely not. No one wants to work with these people right now because they've lost all trust. What you would need is the government to step in and say, we'll take care of this, we'll save the day. And they're not going to do that because they're looking at the situation saying, see, we need tighter regulations in crypto because of all this funny business. And the reason this is so hard to catch is these balance sheets from these hedge funds are not public. In fact, it was reported that CoinDesk actually got a hold of the balance sheet and then started sharing it around. And that's the only reason that this became apparent, and this whole situation has continued to develop. And this has led to a lot of panic in the crypto space, and basically every exchange is now under a microscope, and that includes Coinbase. Coinbase has been in trouble for minor illegal activities, some employees that are front running trades. It's definitely not as huge as what's already occurred, but it does make people worried about, okay, well, what else is going on though? Is there something else here? Now for Coinbase in particular, I see BlackRock as a major investor saying that there is a degree of trust that is definitely present within their Coinbase relationships. Trust that is pretty hard to build. But even with that said, it wouldn't be impossible that there's maybe some errors within Coinbase system, and this market crash is definitely going to test them. The only crypto exchange right now that seems completely safe and not involved in any illicit activities is Gemini. That name might be new if you just watch the videos, but it's one of the companies that I've also had listed in the Discord as an exchange that I also trust. And now they seem to have a pretty universal trust within the community as well. And that's what led to my mistake. Thought the lows were in. So when I had set up this Coinbase trade, I said, well, looks like we're going to go to the upside, considering that I don't think there'd be further capitulation of Bitcoin. But now that Bitcoin's falling apart, we got the big move to the downside. And it sucks. I got stomped out of some of my stock position as well. We did make some day trades here, really got back a lot of that money actually, but it does mean I don't think that the lows are in yet. So let's actually go back to some of the old charting that we did in the Discord. A lot of these were actually posted back in June from one of our other members. We thought that he had nailed it with this first probability. Bitcoin went down to about 17,100. We had the lows around 16,500, but we did actually also post the second probability of, well, maybe after that low, we get a bounce up and then we actually see 12,000. Now, after all the chop, we said, looks like the lows are in, looks like the first probability likely played out. But now that Bitcoin has continued to sell off, we would start looking for this 12,000 mark for what would be the actual bottom. Now, what does this mean for Coinbase? This stock's going to need some time. The sentiment here is terrible, and I'm just going to have to keep an eye on it for now. Now, it's probably a good time to draw some correlation to what happened with Meta. We had a horrible earnings sell-off. I actually bought around here, did get blown out of the option trades, but right now, the stock's already above our entry, even though we ate a lot of pain for a few days and what looked like it would just keep going down forever, which is another example of, hey, don't get too much in your emotions, because I do expect Coinbase to actually bounce back before Bitcoin bounces back. And another story we should cover that's blowing up right now is that Tom Brady was also caught up in the FTX fallout. He was invested in the company and supposed to be a brand ambassador. Now, there are some reports that he's lost most of his money because of this. That doesn't seem to be the case. It does seem like it's going to put a debt in their net worth, but they're still worth, hundreds of millions of dollars. He'll be okay. It just sucks. He's had a lot of L's lately. I feel for him. And thankfully, there's no way he lost as much as Sam Bankman-Fried, who's the CEO that's the cause of all of this, who's lost an estimated $14.6 billion, about 93% of his net worth. He's also filed for bankruptcy and is considered to be right now in $600 million worth of debt. And this news is just out now. I haven't posted the YouTube video yet, so I can't be like, see, I told you so, because I haven't uploaded it yet. But Binance has walked away from the deal with FTX. There was some speculation that Binance would step in and bail them out, but it's now confirmed that they are walking away because cool guys walk away from explosions, which further confirms what I was saying earlier, which a government's going to need to step in and clean this up. That's the only way it gets cleaned up. And I think further lows are going to come in for Bitcoin because no one wants to touch this mess, especially after all this trust has been broken. But now it's time to talk about something really exciting: elections, which is could or not be satire. I don't know. Maybe you are excited and maybe you're like, oh, shut up, I'm already clicking off the video, get me out of here. Come back though. They're gone. Okay. As far as the elections go, the red wave is here, and it seems like the government will be more divided moving forward. Now, not all the votes are in, but it looks like pretty much universal wave from both the Senate and the House at this point in time. Now, remember, historically, this is really bullish for the stock market. The stock market loves when there is some controversy, when there is a gridlock potential for the government. It does not like one party being in control. It likes the separation of power, meaning that it's harder for either party to get anything done. And if they can't get anything done, they are less likely to do anything stupid. And that is reflected in the historical data, where we could see that usually after November, we get a bit of a rally. Now, I think the market environment's different. So even though I'm expecting a short-term rally, I do still think that more lows are going to be on the way. And by the way, this is shared on my Twitter, and I share tons of great info on Twitter, so maybe give me a follow at Nobel Trading. But if you look at SPY, it looks like the election rally's been canceled, and what's going on in Bitcoin seems to have a heavy weight on this market right now. We can see here we've actually fallen out of the bullish RSI range for the S&P index. This is huge. And right now, if we also look at how option traders are choosing to allocate their money, if we go out a week ahead of time, so we're going out 9 days ahead of time, we can see the heavy open interest in puts on the market right now. And even if you go further out, there's a lot of that trend continuing. And that's a big deal because post-election rallies have a huge hit rate. Usually, if you buy into the election, you come out 3 months later, you're up big because the market tends to rally so hard post a midterm election. So it's kind of hard to think that only what's going on in Bitcoin is keeping people out of the market. So now we're kind of just left to speculate. And I've actually taken a lot of my shorter term positions just completely off the table and built up some cash right now because there's a lot of uncertainty. But here's my raw thoughts. And remember, this is an ongoing conversation in the Discord. If you want to see what other people think, join the Discord and you can participate in those conversations. But my thoughts right now are that the market might not like the gridlock and the government right now because it might see this as a potential issue because of what's going on with the low growth and the high inflation right now in our economy. It might say, well, if policymakers aren't able to make new policies or agree on a way to fix these things, we cannot have this prolonged damage in the economy, or it's going to be catastrophic. So there might be a lot of fear about the gridlock when usually there's a lot of celebration about that. Now, the rebuttal I would give to that, to play both sides, would be, okay, but inflation is a universal issue for all politicians. If you leave inflation too high, an uprising, more extreme things can happen, a revolution or, I would say that that's way, way, way far out in the more extreme outcomes. But that is something to definitely consider. If we're not going that extreme, we could just talk about just total disruption of society. If prices get out of control, remember we're talking about energy is going to come right back up, right? We've been draining the reserves to keep that down. When that starts to come up and then the inflation's back in the Americans' face every time they have to get gas in their car, yeah, this is going to be a huge issue for all politicians. So I think universally there is a cause for them to work together and for not to have that gridlock effect. But right now, the markets might still be trying to battle out those narratives to see how it turns out. And so as a trader, I'm definitely holding on some cash right now and just kind of waiting so that I can react, because this uncertainty makes me nervous. As an investor, I've set stop losses on my positions as well, so that I can lock in the minor gains that we've had so far after buying after that 350 low. And look, even if you're a passive investor who's doing just incrementally consistent buying in this current market, buying VU or buying SPY, you could be in for some trouble for the next few years, even if that worst scenario happens. If this gridlock turns out to be a bad thing, I would think that this is good cause for worry. Remember, lots of people like to preach that active investing does not perform as well as passive investing. And what you really need to consider is liking the video and subscribing so you don't miss my next video where we cover these two comparisons in much more detail, because I think you're going to find it very helpful. Anyways, that's it for this week's report. I'll see you on the next video out later this week. It's going to be a special report